Investing. It's one of those words that can sound a little intimidating, right? You picture all these complicated charts and jargon, but what if I told you it's not some financial chore? What if it's actually a personal journey? A story that unfolds right alongside your own life? Well, today, we're going to demystify all of that and show you how investing is really all about you. I want you to think of your financial life like a roadmap. Seriously, the path you're on in your 20s, with those wide-open highways and endless possibilities, is going to look way different from the one you travel in your 60s, where maybe you're looking for a smoother, more predictable ride. The point is, your investment strategy has to adapt to the changing terrain of your life. And that, right there, is the core idea we're digging into. Your life dictates your investments. As you grow and change, your financial plan has to grow and change right along with you. It's a living, breathing thing, not some decision you make once and then just forget about. Okay, take a look at this. This graph is what we call the investment life cycle, and it's basically our guide for this whole journey. You see that curve? That's your financial life story, from that very first job all the way to retirement. And we can break it down into 3 main phases that pretty much all of us go through: accumulation, consolidation, and then spending and gifting. So let's start at the beginning, the accumulation phase. This is you in your early career. And here's the secret. Your greatest asset isn't what's in your bank account. It's time. You've got decades ahead of you. That means you can afford to take on a bit more risk. Think things like stocks, all with the goal of maximizing that long-term growth. Sure, the market's going to have its ups and downs, but you've got time on your side to ride out any storm. All right, now let's fast forward to the consolidation phase. You're in your 40s and 50s, your career's probably more established, and hopefully your net worth has been growing. The whole game starts to shift here. Protecting what you've already built becomes just as important as growing it. You're still investing for the future, for sure, but you're probably starting to dial back the risk just a little bit. And that brings us to the final phase, spending and gifting. You've retired. It's time to enjoy the fruits of all that labor. Your focus does a complete 180. It's no longer about growing your investments, but about generating a steady, reliable income to fund your lifestyle. And of course, this is often when we start thinking about the legacy we want to leave behind. So, we've seen how your strategy should change as you go through life. But what are the actual tools you use to build this portfolio? Let's break it down into the absolute basics. The world of finance can seem so complex, like there are a million different options. But honestly, for most of us, it really just boils down to 2 fundamental building blocks. It's simpler than you think. And here they are, stocks and bonds. And I've got the easiest way for you to remember the difference. Buying a stock is like saying, I own you. You're buying a tiny piece of that company. Buying a bond, on the other hand, is like saying, you owe me. You're basically loaning money to a company or a government, and they promise to pay you back with interest. See? Ownership versus a loan. These 2 are the foundation. Pretty much everything else you hear about, mutual funds, ETFs, is really just a different way of packaging them up. Okay, now that we know the basic tools, let's talk about the single most powerful force in your entire investment journey. And that force is time. Starting early unleashes this kind of magic called compounding, and you're about to see just how incredibly powerful it can be. I know what you might be thinking. Come on, how much of a difference can a few extra years really make? Well, let me tell you. The answer might actually shock you. Just look at these numbers. Let's say you invest $3,000 a year and you get a 6% return. After 20 years, you've got over 110 grand. Not bad, right? But look what happens when you just add 10 more years. It more than doubles. And another 10 years after that, it more than doubles again. But here's the really mind-blowing part, the aha moment. The growth in just those last 10 years is more than the growth of the first 30 years combined. That is the crazy power of compound. Let's just let that final number sink in for a second. Over $500,000. And this didn't come from some genius stock pick or some wild, risky bet. Nope. It's the result of 2 simple, almost boring things: being consistent and giving it time. That's the reward for just starting the journey and staying on the path. So, we've looked at the roadmap, we've talked about the tools, and we've seen the incredible power of time. Now it's time to bring it all back home. What does all of this mean for you? This quote just sums it all up perfectly. I'm glad I started early and adjusted along the way. The wisdom there is really twofold. It's not just about starting, that's huge of course, but it's also about adapting your strategy as your life changes, just like we saw on our roadmap. So, we'll end with this thought. We've laid out the map, from those first steps of accumulation all the way to the final destination. The only real question left is the one you have to answer for yourself.
Where are you on your journey today? And what's your very next step?